Good evening, everyone. I'm Amit Jain, analyst at Carriage. I welcome you to our discussion today on gold and jewelry. Will demand continue to glitter? We sincerely appreciate you are joining us for this webinar. The session will be moderated by Tanvi Shah, Senior Director at Carriage Advisory. We will commence the session with a presentation by Amir Sheikh, Assistant Director, and me, Amit Jain, analyst at Carriage Advisory. This will be followed by a panel discussion and a Q&A session. In case of any queries, participants are requested to key in your panel. We will take up your queries at the end of the discussion. We would like to welcome our respected guest speakers for today, Mr. Sayyam Mehra, CEO of Unique Chains and Jewels Limited, and Mr. Sanjay Banka, CFO and Head of Investor Relations of Senco Gold Limited. Let me begin the presentation by sharing the key messages we will be discussing. Let's begin with global transition. The global gold market is going through an important shift with changing patterns of demand and new forces shaping prices. India continues to play a central role in the world gold story, both as a consumer and as a market that reflects deep culture and economic linkage with gold. We are also seeing a gradual change in how people view gold, not just as jewelry, but as a form of investment as well. The Indian jewelry industry itself is transforming with stronger brands, better transparency, and growing organized players. At the same time, rising prices and global trade changes have created new challenges that call for fresh thinking and adaptability. And finally, we will look at what the next phase of growth could look like. Let's first take a quick look at how the global gold market has changed over the last decade. Understanding the global picture is essential as it provides the context for everything unfolding in India's gold jewelry market. Gold demand around the world has shifted, not just as how much people are buying, but also who is buying and why they are buying. So let's begin with the bigger view, the global demand trends, and then we will see how India fits into this evolving story. Gold jewelry has remained the dominant contributor to total gold demand, accounting for an average of around 47% over the past decade. In the last 10 years, global gold jewelry consumption has dropped by nearly 20% to reach 2,027 tons in CY 24. Overall gold demand has, but the interesting part is overall gold demand has still gone up by around 5% to 4,624 in CY 24 from 4,399 tons in CY 14. So what explains this difference? The answer lies in central banks. Global central banks have been buying and storing more gold as a part of their reserves. Since CY 22, every year central banks have accumulated over 1,000 tons of gold, as against average of around 500 tons in the preceding decade. This sharp increase in gold accumulation by central banks can be attributed to geopolitical situation and economic uncertainty across the globe. Gold's key features such as hedge during crisis and inflation are influencing central banks' decision to hold more gold. Now let's bring the focus back home. India's continue to play a major role in the global gold market. In CY 24, India's total gold demand stood at around 803 tons, making us the second largest consumer after China. But when we talk purely about jewelry, India is number one in the world, which we will discuss in the next slide. However, there is an interesting observation. Despite one of the largest gold consumer, India's per capita gold demand has stayed almost the same over the last decade at 0.6 grams per capita. This indicates strong potential for future demand, as rising disposable income and increasing participation of young and working women are likely to support the future demand. As discussed, in terms of gold jewelry consumption, India is number one in the world with a market share of 30% in the overall gold jewelry demand as of CY 24. That's powerful reminder that gold for Indian household is not just a financial asset. It's a part of our social and emotional value. Over the last decade, gold jewelry demand has declined by around 3% CAGR to reach 1,888 tons in CY 24. Whereas the India's jewelry demand comparatively has shown resilience and has marginally decreased by only around 1% CAGR to reach 563 tons in CY 24. After a brief dip, India's share in global jewelry demand has increased to about 30%, showing how deeply gold remains a part of our culture and our lifestyle. Over the last decade, we have seen a gradual shift in the mindset of Indian consumers. While jewelry demand declined at a CAGR of 1.1% from FY14 to FY24, the demand for gold bars and coins grew at a positive CAGR of 1.5% during the same period, as you can see on the top of the slide. Many people are now buying gold bars and coins, not just jewelry. The share of bars and coins has increased from 25% in CY14 to 30% in CY24. During this period, the jewelry demand has declined from 627 tons in CY14 to 563 tons in CY24, representing a decline of 10%. Whereas demand of bars and coins has surged from 206 tons in CY14 to 239 tons in CY24, representing 16% growth. This shows that gold is being viewed more as a financial investment rather than only as an ornament. And this change reflects financial awareness, investment oriented mindset, and increasing awareness of gold's role as a financial asset. In short, gold in India is slowly moving from logger to the portfolio. Now, I would like to request Amir to take the presentation forward from here.
Thank you, Amit, for the key insight. First, let's understand the demand pattern in the gold jewelry consumption of India. If one period that defines India jewelry consumption, it is the last quarter of calendar year, that is Q4, which is clearly visible in this table. This period has consistently recorded the highest jewelry demand of the year. There is clear reason for this. It is the season of festivals and weddings. Jewelry makes nearly one-fourth of total wedding cost in India. So even when people spend less on other things, wedding continues to drive gold sales. Additionally, festivals like Diwali, Dhanteras are considered auspicious to buy gold as these symbolize wealth and good fortune. Besides, it has also observed that demand from rural comes largely during Kharif and Rabi seasons. Now, if we move to the overall market size of India's jewelry market, that tells an interesting story. From CY18 to 24, the market value of gems and jewelry has grown at a CAGR of 8.7% to reach at 8.8 trillion. But during the same period, the consumption of gold jewelry, which holds a major share in gems and jewelry market, has witnessed a decline of 1% CAGR. So we can conclude that this is not a volume driven growth, it is a price driven. The rise in gold prices has helped market to head northward, even though consumption has largely remained stable. Going forward, the market is expected to continue with this momentum only and expected to register a growth of 11.1% CAGR till CY28. Moreover, when we analyze the regional demand, our study indicates that the South India holds largest share of nearly 40% in jewelry market. And this share has remained steady for a very long period. This strong hold can be attributed to solid cultural preference for plain 22 carat jewelry, higher household incomes, steady financial inflows, remarkably from Gulf into Kerala. Also, Tamil Nadu's thriving IT and manufacturing base further support the purchasing power. The Indian jewelry market has experienced a major transformation. As you can see in this slide, that share of organized segment has increased from 31% in CY18 to 36% in CY24. This shift has been supported by reforms like GST, mandatory hallmarking, and changing consumer preference from trust and transparency. Also, younger buyers are preferring branded showroom and certified products. This trend benefits larger and organized players who have strong brand value, better design, and trusted quality. To capitalize this opportunity, these organized players are expanding into tier 2 and 3 cities to reach more customers and grow their presence. For the long term, this shift towards organized retail is a major growth catalyst. When we look at the performance of key listed players, the sector has shown strong top line growth. As you can see here in the left hand chart, the revenue has grown steadily at double digit rates in last 4 years. As discussed, this growth is largely driven by price rather than volume. Also, as you can see in the right hand chart, the profit margin has stabilized after the COVID-19 disruption. One of the factors that could aided in margin improvement is growth in the studded and lightweight jewelry. However, going forward, to attract more customers, players are likely to spend more on the marketing. Now let's look at the global trade angle. Recently, US has imposed a 50% blanket tariff on Indian export, which also include gems and jewelry. The US is crucial market as it accounts for over 32% of India's jewelry export. Hence, this recent tariff is a serious concern, particularly for exporter of diamond, gold, and color stone jewelry. While talk on the trade tariff are still going on, India jewelry exporter will need to diversify their markets, perhaps expanding further into Middle East, Europe, and Southeast Asia. Beside trade concern, rising gold prices are major issue as they affect affordability. However, consumer may counter this issue by switching to lower carat jewelry. This allow buyer to stay within their budget while still owning a gold jewelry. As you can see in this table, which offer a critical insight. For a typical piece of 22 carat plain gold ornament, which costs around 32,700, and for the same weight, if they opt for lower carat such as 18 or 14 carat, they can save up to 17 to 35%. Likewise, the consumer looking for diamond studded jewelry likely to shift their preferred to likely to shift their preference to lower carat gold. Given the current gold price scenario, it is logical for consumers to explore ways to maximize both value and aspirational appeal. Now let's discuss on the outlook part. Let's take a closer look at the chart on the left hand, which highlight a long-standing relationship between gold prices and the 10-year US government yield. What stand out immediately is this: when bond yield falls, gold tends to rise. This is because gold doesn't pay interest. So when bond yields are low or falling, the opportunity cost of holding gold goes down. That makes gold more attractive, especially during economic uncertainty or when central banks are cutting rates. With expectation of further rate cut, gold prices are already heading towards northward. This trend reinforces gold's role as a safe and stable investment when the world becomes uncertain. Now, if we shift to the table on the right hand, it gives us more evidence. Here we have mapped rate cuts and gold return in the quarter followed. The most of occasion when interest rates are cut, gold has delivered positive returns, largely between 7 to 12% in the following quarter. This is because rate cut indicates economic weakness or inflation risk, boosting investor demand for gold as a store of value. Also, lower rate typically lead to dollar depreciation. And since gold is priced in USD, it becomes cheaper for other currencies, pushing global gold demand up. And as discussed, rate cut by Federal Reserve reduces the yield on bonds and cash, making non-yielding asset, especially gold, more attractive to hold. Now let's see how income growth affects the global demand as against increase in gold prices. From FY15 to 25, the gold prices have increased at a CAGR of nearly 11%, while per capita disposable income grew by only 9%. Despite income growth lagging behind increase in gold prices, gold jewelry demand declined only marginally by 1.9% CAGR, indicating that gold demand in India is largely influenced by rising incomes than price movement. Additionally, on the right hand side, we can see that World Gold Council study shows that 1% rise in per capita income leads to a 0.9% increase in gold demand. However, higher prices can still limit buying, as every 1% increase in gold prices in rupee term tends to reduce demand by around 0.4%. This indicates that demand responds more to income than price. That's a powerful indicator for gold's emotional and economic importance in Indian household. Now let's discuss on the key growth drivers and challenges for the industry. Key drivers are a growing disposable income, which likely to support gold and jewelry's future demand. Despite changing trend, gold remains deeply rooted in Indian culture and wedding and festivals which are likely to act as a cushion for the future demand. Financial inclusion and organized gold loan players have improved liquidity, enabling customers to monetize ideal gold and sustain purchasing cycles. In times of volatility, investors continue to turn to gold as it is considered as a safe haven. Also, it is serve as a hedge against inflation, keeping investment demand firm. Also, new digital platforms and products like ETF and sovereign gold bonds are making gold more accessible and convenient for younger investors. Besides, strong purchases from central bank across the globe are reinforcing long-term confidence in gold as a strategic reserve asset, supporting overall market stability. In terms of challenges, India heavily relies on imported gold and diamonds, making the industry vulnerable to currency fluctuation and global trade disruption, which we are currently seeing. Slowdown in major economies can dampen export demand and affect overall jewelry sales. Persistently high prices have started to weigh on affordability, particularly in the mass segment, leading to shorter purchase cycle. However, navigating these factors carefully will define the success stories of tomorrow. To conclude, the Indian gold jewelry industry stands strong on both tradition and transformation. Yes, growth in recent year has been mostly price-led, but the industry's adaptability and formalization have given it a solid foundation. As gold prices remain high and global market evolve, India expected to continue to be world's heartbeat for gold jewelry. Not only because of our timeless cultural bond with gold, but also due to our expanding middle class, steady income growth, rising share of organized players, and favorable demographic base that keeps domestic demand strong and enduring. Besides, increasing financial awareness and investment oriented mindset of gold as a financial asset further add to the growth. Going forward, if this structural shift continues, India will not only remain the largest jewelry market by volume, but also emerge as the most dynamic and globally influential gold ecosystem in the years to come. With this, I conclude my presentation here. Over to you, Rahul.
Thank you, Amit and Amir. Attendees are requested to key in their questions, which we will take up after our panel discussion. Now, may I invite Tanvi to take over this session, please? Tanvi leads the advisory and research vertical at Care Analytics and Advisory Private Limited, bringing with her nearly 2 decades of rich experience across market research, corporate advisory, credit ratings, infrastructure consulting, and project finance. A seasoned finance professional, Tanvi has previously held various leadership positions at Crystal Limited, where she played a pivotal role in delivering strategic insights and client-centric solutions. She holds a bachelor's degree in electronic engineering and an MBA in finance. Over to you, Tanvi.
Thank you, Rahul, and a very good evening to all of you. Thank you, Amit and Amir, for an insightful presentation. Gold prices have touched record high, and with festive season round the corner, we thought it's an ideal time to have deliberation with the industry stalwarts on various opportunities and challenges in this sector. It gives me immense pleasure to introduce our panelists. We have with us Mr. Sanjay Banka, who is the CFO and Head Investor Relations at Senco Gold Limited. Mr. Banka is an alumnus of St. Xavier's College and holds dual degree CA and CS. He has a rich experience of over 3 decades across leading organizations such as Senco Gold and Diamonds, Reliance Communications, Bharti Airtel, and Merino Group. Besides this, Mr. Banka is on He has national awards for excellence. He is also a member of the Chartered Institute of Securities and Investment, Indian Council of Arbitration, and All India Management Association. A warm welcome to you, Mr. Banka.
Thank you very much, Tanvi. Thanks a lot.
Yeah. We have our second panelist, Mr. Amit Modak, who will be joining us shortly. So just a brief intro of Mr. Modak. He is a director and CEO at PN Gadgil and Sons Limited and has over 3 decades of professional experience across finance, commodity, markets, and retail jewelry segment. He holds degree in commerce as well as law and a diploma in international trade as well as an MBA from Pune University. He is currently advisory board member to MCX Bullion Advisory Committee. In the past, he has been the board member on Pune Stock Exchange and Indian Bullion and Jewelers Association. Glad to have all of you for the panel discussion today. So in India, gold is slowly moving from locker to portfolio and catching up as an attractive investment avenue. In that context, my first question is to Mr. Banka. How are digital platforms, tokenized gold, and AI-based analytics transforming retail distribution in an era of rising gold as an investment avenue?
Yeah, Tanvi, very good question, but these three are all different questions. First is about the digital gold, right? So digital gold is clearly playing a role, but not a big role. So as we say, digital gold is sort of investment demand. So when we look at the total demand of around, let's say, 800 tons, 60% is a jewelry demand. Like, we have also launched DigiGold. There are other platforms on the digital gold which are in place. But in a digital gold, the demand is the minimum ticket size can range from 300 rupees to 500 rupee, and the average holding will be 3 to 4 grams. Somebody can go for 10, 20 grams. So from the jewelry industry, we see digital gold as a platform to convert from a digital gold to jewelry, which means that customers can buy digital gold and then convert it into jewelry. It does not have a huge traction. Your second question was on the AI-based analytics. Yes, AI-based analytics are very important. So it depends. It is varying from jeweler to jeweler. Let's say we work on Microsoft ERP platform, and end-to-end our entire organization is on ERP for almost more than 15 years. So most of our operations are driven by BI, and now we are also implementing AI, which means that, and primarily AI is deployed in understanding the consumer trends and investors trend, which means which store is selling which jewelry, what is your existing jewelry in a particular store, and then what are the likely trends. So we constantly analyze jewelry demand in terms of various product, necklace, bangle, earring, in terms of size, and try to map the inventory with the sales demand. Where next it will go is that, no, if you can make your design your own jewelry. Let's say you go to the store, you pick up one design, and you can design your own jewelry. We have a AI based tool where you can you can look at the jewelry virtually. So we see a huge scope for AI, and this is still in the very initial stage of adoption. I think jewelry industry is extremely innovative because we are all design based. So we will take all steps to adopt. We will be early adopter of AI to give the best of designs and solutions to our customers.
Thank you so much, Mr. Banka. I would like to warmly welcome Mr. Sayam Mehra, who has joined us on an eminent panel today. So just a brief introduction of Mr. Sayam. He is a CEO at Unique Chains and Jewels Limited and a former chairman of the All India Jewel and Gems and Jewellery Domestic Council. With over 2 decades of industry experience, he has been instrumental in driving operational excellence at Unique Chains and Jewels Limited. Warm welcome.
Thank you, Tanvi.
So, Mr. Mehra, how do you see the increasing integration between the bullion trading platforms and the jewelry manufacturers influencing the price discovery and the procurement efficiency within the India's gold value chain?
So, Tanvi, just can you repeat it, because I think that.
Yeah. So, sir, how are you seeing the increasing integration between the bullion trading platforms and the jewelry manufacturers influencing price discovery and procurement efficiency within India's gold value chain?
No, am I audible,
Yes,
Tanvi?
yes, sir.
Yes, rightly the question which you've said that today, as the gold prices are increasing, we as manufacturers, wholesalers are also in the start we were facing problems that since the gold prices were increasing and when the gold was being sold at the from the wholesaler side to the retail side, it was becoming difficult for the manufacturers wholesaler to again get it back. But we at Unique and when we had a meeting with different jewelers in India, manufacturers, wholesalers in India, we made it a system that whenever we are buying, we need to immediately hedge it via MCX or via the bullion traders in future also. So when the gold rate today is maybe 1,28,000 and the payment is going to come in 15 days, we need to immediately book with our bullion dealers. Now, since the rates have started increasing at such pace, $50 to $70 every day, or maybe 500 to 700, 50,000 to 70,000 a kg every day. So the problem is coming, and the bullion dealers are asking for a hike of 20 rupees or 15 rupees daily, which is about 400 rupees for about 15 days, or 600 rupees, which is 60,000 rupees per kg for about 30 days. So we have obviously asked our retailers that the cost which is additionally been implied should be borne by them also. So that is for the futures we are looking at. But however, the banks, the MCX and the bullion dealers are covering up the cost whenever the rate and the price hike, the rate cutting which is happening due to this price hike. And also the jewelers now have made it a system that whatever sales is happening, immediately manufacturers, wholesalers, immediately it should be booked with the bullion dealer. And we at Unique are also following an 100% hedging policy. However, when the retailer Tanvi is selling it to the it is on the sell side. When the retailer is buying it, is on sell side hedge, and when the manufacturer wholesaler is selling it, it is a buy side hedge. So as manufacturers, we are following the policy of a buy side hedge.
Got it, sir. Thank you. So, Mr. Banka, we are seeing young consumers preferring branded and certified products through online channel. So, as younger consumers increasingly view gold through a digital and a design-conscious lens, how are Indian jewelers adapting their product mix, their marketing and branding strategies to cater to this rising consumer segment? If you could throw some light on that.
Right. So basically, when we talk about wedding jewelry demand, 30-40%, wedding jewelry is for younger generation only, right? So all of and the entire so now I think we have a huge wedding season post the Akshaya Tritiya, post the Dhanteras. So the how do you cater to the younger generation? Ultimately, it's all about the hyper local jewelry. So depending, so the one is the gold jewelry, one is diamond jewelry. Gold jewelry are extremely hyper local, which means no, the designs expectation in the east and west, within east one region or the other, they are highly variant, and that is where we use the BI and AI analytical tool to understand. Let's say if I talk particular about Senko, we launch almost 100 designs per day. So we are seen as one of the largest design house in India, and our motto is to become the design hub, design powerhouse for India. So we look at the design requirement, and secondly, the lightweight jewelry. So as the prices are increasing, we have to ensure that we offer the jewelry to the consumer in their respective price range, and every jeweler has certain segment. So when you look at our quarterly report, you will see that our ASP is around 55,000 rupees and ATV is around 75,000 rupees. A 55,000 rupees ASP indicates certain customer segment. So all of us have to cater to our customer segment. Let's say our stud ratio is around 12%. So it is a diamond jewelry which are region agnostic. You can have a global designs which you can launch in the diamond jewelry, but as far as gold jewelry are concerned, they are mostly traditional. Now it varies from, as I said, it varies from company to company. Let's say in our case, more than 75% are handmade. So we look at the customer demand, customer segment. We constantly look at the sell-through ratio. I'm saying from the marketing and finance angle both. And accordingly, we continue to launch the designs, the size, the weight, which suit to our customers. And within that, we have been growing at a CAGR of 20% for the last 4 or 5 years. And for the current year also will grow, which means that we are doing the best which we can do to serve our customers for their price point, for their design aspirations, and for making them look beautiful, handsome, and smart through our female-centered design and male-centered design, both as well.
Well, sir, so after having looked through the retail perspective, coming to Mr. Mehra on understanding, how the wholesalers are managing the design trends to keep pace with the changing consumer taste while balancing their inventory as well as margins.
See,
And this is, across different regions because the designs vary across regions, as Mr. Banka mentioned.
See, I'll tell you what. See, every 6 months there is a design trend difference which comes in the country. So as wholesalers and at Unique also, once before Akshay Tritiya, there is in 3 months the whole design process is being done, and once before Diwali. So at that time, generally the design trends change. So the designs for each area is different, and each timing is different. For example, if you go to see north, south, east, west. Okay, in the north you will see heavy jewelry selling, bridal jewelry selling, kundan, jadau, and antique, maybe yellow antique also, or without stones antique also selling today. Okay, we at Unique have 2 designers sitting who generally keep on sitting, designing, making designs, sitting with karigars also. So when it comes to the major corporates, they also send their designs to us. But when it comes to single store or a 4 or 5 store corporate, they rely on their designing, most of the designing on us, on wholesalers and manufacturers. So there is, in gold, we have different ranges like Calcutta Jewelry, Mumbai, Rajkot, Mangal Sutras, bangles, chains, antique, jadau, kundan. So there is a variety of 9 products that we at Unique are keeping, and for every range, there is a different kind of designing which is required for a different area, which is divided into north, south, east, west. Now, also there is another thing to it, where since the gold rates are rising, so the 22 karat market, which was previously at 95% or a 93 to 95% of the market share of gold, has now come down to 80%. 10 to 15% of the market now is going to 18 karat also. So which is in the likes of Punjab, Haryana, Bihar, UP, or some parts of the south. And these areas want lightweight jewelry with designing. So a lady who is today going to go to her wedding or a family wedding wants a big set also, not because of the gold rate. They do not want to compromise on the look of it. At the same time, the gauge has to become thinner so that the weight is matched, and also the purity is coming down to 18 karat. So the 17% profit is coming in that also for the end consumer, and the weight average is also coming. So that is there. And when it is coming to Calcutta Jewelry, so the Calcutta Jewelry today, the HNIs today, even if they are wearing diamond jewelry or kundan jadau, but when it comes to a certain sector who still prefers gold jewelry when they come to the wedding. So the Calcutta Jewelry, which is ranging from approximately 100 grams, 150 grams, which is the range of 15 lakhs to maybe 25 lakhs, and the value is also increased. They need designing, they need quality. They don't want to give any restriction on quality. So we are maintaining that kind of Calcutta Jewelry for them. The lightweight rings are coming. The gauges have increased. Previously, the set which was in 42 grams with the designer flower, with the more punks involved, now that 40 grams has now started coming in 32 grams with the fusion technologies involved in it. So I think with the ever-changing market and the consumer demands, we as wholesalers are trying to keep up to the pockets of the end consumer, so that the likes of 2 lakhs, 5 lakh, 10 lakhs, when they come to a retail store, it is matched with their pocket size and the demand does not increase. As you said, Amir said in the start that the import of India has not that much decreased, and the jewelry sales have not decreased that much due to the preferences. The consumer pocket is maybe decreasing, but because of the designing, maybe because of the millennials coming in, maybe because of the rose gold jewelry coming in, because of the lightweight jewelry coming in, the numbers of consumers are increasing, and the designs that we are manufacturing in lightweight, maybe 2 grams, 3 gram chains also, which is coming to about approximately maybe 20,000, 25,000 or 18,000, also makes a difference to the mindset of the end consumer. Over to you, Tanvi.
Fair point, Mr. Mehra. So, as we noticed, there is a shift in terms of, the consumer preferences as well as the type of jewelry because of the higher gold prices. We have also seen that organized sector has penetrated well in terms of, garnering market share from the unorganized segment. And in that context, Mr. Banka, I would request you to throw light in terms of, the key factors which are helping the branded jewelers gain trust and market share, especially in the tier 2, tier 3 cities and the semi-urban areas.
So clearly, before the hallmarking became mandatory, customers were not clear. They were trusting the local brand, and some of them were getting duped also by the local players. I must say local players are all good, but there were always unscrupulous players. So with the hallmarking becoming mandatory, industry is propagating more and more about hallmarking. Customers are becoming aware. So customer also, the trust factor comes into play. That okay, even though somebody is hallmarking, they still feel that X jeweler hallmark is better than Y jeweler. So they will ultimately end up trusting a national listed brand versus a local shop. I'm not saying a small, I'm not talking about the big unorganized jewelers, somebody who is having 1 or 2 stores and is still having a turnover of 500-600 crores. So trust factors comes into place. And then when we create a brand image through our brand ambassador, we are constantly on the top of their mind. That is one. Third is you are always offering them some schemes and incentives which a local player cannot offer. Let's say the fixed gold rate scheme that you deposit. Let's say if you are deposited in August, you can buy for next 3 months at the same rate. Your rate gets fixed. The scheme called Swarn Yojana we call, where EMI scheme, you deposit in small installments, and at the end of the scheme, you can go and get certain discounts. Those offers you don't get from a small jeweler, and even if you get it, you don't have a trust that your money is safe or not. So you get that comfort from a big jeweler. And when the company becomes listed, let's say in our case we have become listed 2 years hence, it adds to the trust factor. I think all these factors play an important role. Customers have also become suave. We are talking about a major part of India which has become very educated, and through the social media, they are all seeing, let's say, governance, control, risk. So all the jewelry is all about trust. Even if before you buy, when you place the money in advance, you need to have a trust in the company. You need to have a trust in the financial strength of the company, which that is what is going in favor of the organized jewelers. Then a lot of designs. So let's say in our case, we've got 17 own designers. They constantly look at the design trend. Then we get the jewelry. Sayamji, he's a part of, we can say, part of Senpo family member. He's a great support to us, a business partner. So we get a lot of support from the wholesalers, our karigars. So this strength don't the small jewelers don't get that strength, and we are part of a larger ecosystem. We have operations in Dubai as well. So we bring international brands. We have a very large thinking. That is what customers comes to the large jeweler and pays the price as well. And I'm sure that you are aware about there are huge differences in the margins among the various listed players, south-based players versus north-based player. Uh, for a good brand, for a good design base, customers are willing to pay higher, and while they can get a similar product at a lesser price.
And Mr. Banka, in the similar context, how are we seeing the store expansion by the organized players in the light of the current rising gold prices?
No, it's very amazing, and it's a very praiseworthy that without taking the names of all the large players, listed players who are our peers and competitors, they are all growing, and we are very happy that the jewelry has now emerged as a sector. Earlier, before our listing, there were only two, three companies, but post our listing, it has given a faith and confidence to the entire sector. The industry is growing. The trust of the bankers is also at all-time high. They have understood the business model, so funding is available very comfortably. I don't want to say it easily, but extremely comfortably. The interest rates are within manageable limits. So with the own fund and with the borrowed fund, all the large players are growing, and that is how the entire organized sector, which is still at 38%. Let's say we are talking about a 90 billion market of only 38, 36 to 38%, which is going to become almost, let's say, 128 to 130 billion market by 2028. This growth will continue, and it is good in the interest of the industry and the company. Why it is important? Because all the malpractices of GST, the cash transactions, all they will erode out. Everything, the entire transactions will come in the formal economy. Job creation will happen, and not only job creation, the digital India vision of our respected Prime Minister, that all we will drive through this process. And I feel that over a period of time, the small jewelers will become part of franchisee network. So I think it is a win-win for the entire society, for the consumers, for the government, for the regulators, and for the business partners as such.
Thank you, Mr. Banka. So, in terms of exports, we have seen that recently US has imposed a 50% blanket tariff on Indian exports, which includes gems and jewelry. So, Mr. Mehra, what's your view as the US tariff on the jewelry export looms? Do you see any spillover impact on the domestic demand as well as the pricing in the Indian market?
First of all, I'd like to tell you that the Indian exporter is very aggressive. Most of the problems that has been faced is from the diamond exporters who are exporting it to the US. And now we are supporting the reasons for not for the tariffs increasing to maybe 50% were obviously because of some things that were not okay with the Indian government also, and we are totally supporting them in their league that for agriculture they wanted some discounts, the US and everybody. But we understand that we sat together as exporters. We are now looking at the Gulf market, the Dubai market, Saudi market, maybe Malaysia, Singapore. We're going to the UK and Australia, wherever FTAs are happening. European markets now it is opening up. And I think one more thing, whenever, for example, for the diamond, most of the diamond and the polished things are happening in India. It's happening, and the advanced gold is coming from there, or the casting is done and coming from the US, and then it is setting and going there. So there is a slight loophole also which is being done by the diamond manufacturers. We at Unique are catering to the Singapore, Malaysia, Australia, UK, Dubai markets. So I think overall it has not affected, the tariffs has not affected that much to the domestic exporters. And one more thing I would like to tell you, that only most of the 9-carat jewelry was being exported to the US. We sat with the ministry, and we've already passed the 9-carat jewelry can be now hallmarked and sold in the Indian markets. So that can be now nullified in a way where that jewelry is easily sold in the and hallmarked and sold in the domestic markets. Previously, the gold rates were 60,000, 70,000. Now it has gone up to 130,000, which is 50% higher than the actual rates. Customers have come down to about 10%, 12% of customers have come down to 18 carat. And now we are looking in the coming 2 to 3 years where the people have, the customers have started accepting lab grown and real diamonds in 9 carat now. So in slowly, even the other sector will also be accepting the 9 carat. So I don't think the effect of the US exports is going to affect that much. The market, India has 140 crores of the people here, and the effect maybe is there for the 2 to 3 months, and 6 months it may nullify.
Thank you, Mr. Mehra. My last question to Mr. Banka. We have seen that inflation and higher gold prices have changed consumer behavior. So, what's your view on gold jewelry demand in light of the upcoming festive and the wedding season? Because the current quarter is ideally the best quarter for the industry in the backdrop of the high gold prices.
No, I think the trend which we are seeing so far are extremely encouraging. It appears as if there is no tomorrow. People want to buy jewelry. We are seeing good crowd at our stores. I'm sure that all other jewelers are saying the same thing. In quarter, let's say, so when we reported our H1 results, H1 growth was 16%. So like Q1 was almost around 28%. Q2 was slightly muted for us. But what we've always maintained that if for one jeweler or for one region, the customers don't come in one quarter, they will surely come in second quarter. So to my understanding, the demand in Q2 was muted primarily due to the Shraddha period and the GST expectation. So now that the customers whosoever had held up their demand for capital goods, TV, AC, fridge, scooter, car, once that demand has been met, and I'm understanding that there is huge demand for the personal loans, and so we are seeing a very good demand for jewelry so far. And now we are only 3 days before Dhanteras. So we are hopeful that Dhanteras for Senco for quarter three and for the entire jewelry industry will be good, and for the entire India as well. So when we talk about the GST cut, the government had assumed that there will be a GST loss of, let's say, around 80 to 90,000 crore, and it was also estimated that this GST loss will be compensated by a higher GDP growth. So I think everything is spanning out in favor of the jewelry industry. Consumers are sort of having a FOMO effect, and not only consumers, even central banks globally. So when you look at the gold purchased by the Indian central bank, it has increased by almost, I think, from 600 tons to 800 tons, almost 25% increase over last from 21 to 25. China central bank has also held up the demand. So we are talking about the gold demand and gold jewelry demand. To my understanding, in the current phase of uncertainty, that the US Treasury rates expected to come down in two more notches, and then the de-dollarization risk. So central banks will continue to buy gold for next 2 to 3 years. Out of 3,800 to 4,000 tons, 1,000 tons central banks are buying, which has also been said by your team. So I see that the trend continuing for next 2 to 3 years, till the time central banks have increased their dollar percentage. Let's say the Reserve Bank of India has already increased the dollar percentage to almost 11 to 12%. China is still at 6%. So from 6%, China, if it moves to 12%, the demand will be huge. And with that huge demand, to my understanding, prices will continue to rise. The FOMO effect will take a huge momentum and acceleration. So net, I see all positive for the jewelry industry. Let's pray for the wealth creation for everybody.
Thank you so much, sir. Best wishes to all of us on this auspicious occasion of Diwali, and all the best to you and Mr. Mehra on this festive and on the best quarter three performance. So with this, we come to an end to our panel discussion, and thank you to the panelists for insightful discussion. And we'll now take up the question and answers. So Mr. Vanka and Mr. Mehra, be connected. And over to you, Rahul.
Yes, we are there.
Yeah, thank you, Mr. Banka. Thank you, Mr. Mehra. Thank you, Tanvi. We have around a few questions. So Ratish Kumar is asking, it is observed that jewelers are increasing their reliance on gold advance scheme from customers as a major source of working capital funding. Some say it's an interesting free funding. What is the panel's view on this? What are the major risks associated with the increasing gold scheme exposure to a jeweler?
No, so this is not for working capital. It is in the interest of the consumers and to ensure that adequate demands come. It is primarily for de-risking the consumer himself. If a consumer had to buy a 2 lakh rupee jewelry, he had planned to purchase in Dhanteras, the 2 lakh rupees, the 2 lakh rupees with a 20% rise or 15% rise, he would have got gold worth 1,50,000. So the jewelry companies are giving them opportunity to fix their rates, and the burden is being borne by the jewelry industry. So when we give that commitment of the fixed jewelry rates, we either have to take a hedging position. That means buy future, where you have to pay almost 5 to 6% annualized premium, or you have to buy the gold and keep it with you. So it's nothing called working capital, because you can't use that money for your other purposes. So it is in the interest of the consumer to de-risk their future purchases and ensure that they are happy with their buying pattern. That's how I'll place it.
Yeah, when they are investing today in the different banks and FD schemes, it is somehow seen that this is also giving a better returns somehow when they are investing it in the terms of the price hike. And when any risk for a jeweler, I would like to say that there is no risk for the jeweler, as the jeweler is already buying it somewhere in the futures or the options market, where it is easier for them to hedge and get it done. For investment purposes, there is banks and there are other terms which is there. This is a help to the fellow consumer who can easily come and buy and plan their purchase and invest it also and save the money with the jeweler.
Thank you, Mr. Banka and Mr. Mehra. The next question is in terms of while we often hear about central bank buying gold and geopolitical tensions are the key drivers, could you elaborate on what you believe is the primary catalyst behind this specific surge in prices in gold?
See, you want me to take it, Tanvi?
Yes, sure.
See, central banks are buying the gold because most of the banks are now looking at de-dollarization. Now, when China is trying to make yuan stronger, previously when there was the Russian and Ukraine war, at that time the world saw that the US seized the major of the properties and the money wherever was lying of the Russian funds were lying to the tune of $300 to $500 billion. So what the other countries are also looking at, and the way the tariffs are also going higher, the way US is reacting with the other countries, each country wants to be secure themselves. So when they are having dollar reserves, they rather keep gold reserves, which is better and easily encashable. So people are looking at the gold reserves as a better option, and silver also was thought about will catch up, but the banks have always seen the gold to be a better reserve than any other commodity coming in. Looking at the Fed rate cuts also, this year one rate cut is expected. Next year there are 3 more rate cuts expected. So looking at that also, in that aspect also, the gold is already factored in that rate cut of this year, and of the next year. Once this comes, you will see a further rate hike in the comics of the international standards. Most of the international banks have already predicted $1,400 to $5,000 the next year, which is 20 to 25% hike. There is a 12 to 15% hike in gold, which is happening year on year. This year, about 45% or more happened. But if you see the old 10 years which is happening, you will see that a 12 to 15% general movement of price increase happening, and there is more confidence. Any war happens, any negativity happens, it affects the gold, and the gold rises immediately. Bangaji, over to you.
Yeah, thank you. No, thanks. I think very nicely explained. And one more factor. So the gold of the central banks is not entirely held in the same country. Let's say in case of India, out of 800 tons, some 350 or 400 tons are still lying abroad in Bank of England. That is also one risk. So we don't know that much detail about why the gold is kept abroad. It must be used as a collateral for some overseas borrowing. The government borrowings are also there. The government borrowing is there, which is used to fund the budget deficit. But then this whole, it is primarily to de-risk the economy, because if there is any tomorrow, if there is any global conflict, then the certain country will side on one side and your entire money will be lost. I think the de-dollarization is going to continue. If India is at 12%, if Sayanji was the finance minister, he would have gone for a higher gold, maybe 25%. So I think with the fear of the US, the Trump economics, this trend will continue, and that's where is getting the main fear for gold price rise. Secondly, ETF also. I think ETFs are globally holding around 3,500 to 3,900 tons of gold globally. Now, this is almost equal to what China is holding. China is holding around 26, 2,800 tons. So ETF demand is playing a major factor. And why ETF? Because now the HNI individuals who don't buy jewelry and who were more in the paper gold, they are also moving to ETF. So ETF and central buying are the two major driving force, and then the FOMO effect by the retail consumer, that they also want to buy the gold. So the juggernaut will continue unabated for next at least 2 to 3 years.
Thank you so much, Mr. Bankai and Mr. Mehra. Next question is, the wedding and festivals are likely to act as a cushion for the future demand. And as wedding is a milestone event in India, so how do you see spending on jewelry, specifically in context of other expenses? Because most of the weddings nowadays are destination weddings. So, Mr. Banka,
Bankaji,
No, I
you
think
could
as
throw
you
some light
as you
on
rightly,
this.
yes. So as Kier has rightly said, I think 25% is a very broad figure, right? Now this 25% will vary from the size of the jewelry. So the jewelry can be, the wedding can be a 10 lakh wedding, the wedding can be a 2 crore wedding, the wedding can be 300 crore wedding. So obviously in a 300 crore wedding it will not be 25%. But if we talk generally, every father wants to give a good amount of jewelry to his daughter for the love and affection, and for also the safety. And this is very important. I think that the jewelry part will not be converted into sales. Let's say if you take myself, my personal case, I've seen the market for last 30 years after qualifying my C exam. In my mind also, I will have to give certain jewelry to my daughter and certain shares. And rather, the way in which we have seen in for next 3 years, the share of jewelry will be slightly higher versus because in case of jewelry, there is a physical control over the same. Whereas in case of a paper gold, sovereign gold bond or ETF, somebody can play with that. Somebody can play mischief and take it away. So that's how I see a traditional Indian girl or a housewife mindset. She will like a physical control over the jewelry. So the net answer is that the jewelry percentage of 25% is a good number, and that will continue. I think Sayamji can add more on this in larger perspective.
Yes, you're right, Bankaji. I think previously the thing is that on the pockets of the bride's father or the bride's family, it was maybe 20 to 22%, but now it is increasing because the gold rates have increased to 28 to 30%. In Hindi, we say that सब कुछ शंड बंगूर है, उसके सोने के और चांदी के अलावा Shadi, if you are getting married, you're booking a venue, you're booking clothes, you're booking anything. It is a fun quotient for about 4 days, 5 days, and enjoyment celebration that is happening. But what the bride is taking with her is going to stay with her for the entire life. In South, in Tamil Nadu, when a girl child is born, 4 grams, 8 grams sovereigns are kept. The father doesn't have a weighing scale at their home. So what they do is, on each birthday of the girl child, she is been given and then it is stored with the father 4 grams, 8 grams, 12 grams, 16 grams. There are coins, chains or bangles which are given. So at the time of the wedding, maybe when she's 18, 21, 24, that the entire box is weighed and given it to her. So there is planning which is happening at each point, and it is not only during the time of the wedding, but in the South they are maintaining it year on year when the girl child is born, and then they give it according to the mindset and the financial capability of the bride's father. So I think previously the factored in was 25, but I think slowly that is increasing, and the other expenditures are being nullified by the gold and silver bank.
Very rightly said. It's more like a security for the girl throughout the life. So, due to paucity of time, we'll take up the last question. So, Mr. Mehra, if you look at it, there is a driving popularity of 9 karat gold in India, and the market that has traditionally favored 22 karat. So, is it primarily due to price or changing fashion taste, consumer taste, or both? And how do you see this shift? Is it more like a temporary shift, or will it be a permanent shift?
See, as the gold rates are increasing, see, in Mumbai, there are certain sectors of the cities also which are buying 24 karat. So that is not that because of the rates, it is on the mindset of the end consumer also. The millennials are going for mostly 9 karat. If you go to see, they're the ones who want to buy a different kind of jewelry. There is only a certain kind of jewelry which is being manufactured in 9 karat. The entire value chain is not being manufactured in 9 karat. So there are some amount of chains, there are some amount of rings, casting, Turkey. These products are being manufactured, Turkish jewelry. These are manufactured in India in 9 karat today. The manufacturers who are manufacturing this are not even 1% or 1 or 2% today. So it is not easily available to the end retailer also, so that he can easily open more showrooms or exhibit to its customers. But when it comes to diamond, that in diamond, most of the products are manufactured now in 14 and after 14 in 9 karat, because they want to sell more diamond rather than gold. And the end consumer, when he goes to buy diamond jewelry, they will be happier to pay less for gold and more for diamond per se. And in gold, I see the trend of 9 karat full-fledgedly coming in 3 to 5 years, maybe when the gold rates are close to 2.5 lakhs, I can say 2.5 crores rupees a kilo. At that time, when the consumer comes in and he will say that I want to buy maybe 100 gram and he doesn't want to shell out 25 lakhs, he will be happier spending 11 lakhs or about 8 to 10 lakhs. That time 9 karat. Now the acceptability of 9 karat gold jewelry in the customers is not there, but surely diamond jewelry is very much acceptable in that. Maybe some chains in rose gold, tricolor is acceptable, where people who are traveling internationally are buying such kind of jewelry, maybe in when one chain or something, when they go to the other countries, they'll see in the different gold souk or different areas. For example, Senco has an office or another stores people have, they're buying it there, they're showing it there. Customers are getting demand, they are understanding that this is trending now. So, but for India, it will take about 2 to 3 years more to properly accept gold jewelry in 9 karat. Diamond is already now acceptable.
I think I will just like to add here. It's more of a cultural, I think it's more of a cultural issue. People think that only 22 karat diamond gold is pure or 18 karat is pure, 9 karat is impure. You are paying the price equivalent to 9 karat. It's not that you are paying for 24 karat and 9 karat. I think it's a lot of requirement to educate the customer. And as they say in Hindi, our Sekta Aviskar ki journey hai. And what Sayam ji has said, once people understand that the price has increased and I have to buy a 10 gram ring or a 20 gram bangle, then they have no choice but to go for a 9 karat. And to my understanding, it will happen faster than this 2-3 years, because in the next wedding season, let's say whatever happens, people who have to buy the jewelry for certain budget, they will not increase the budget for 30-40%. So the adoption will be much faster. That's my belief.
And now as 22 karat is also hallmarked, 18 karat is hallmarked, 14 and now 9. So it is easier for gaining consumer confidence by selling the 9 karat hallmark jewelry available. Pay what you are being said.
Correct.
Yeah, so it is like different options available to the customers based on their budgets.
Yes.
Thank you, Mr. Banka and Mr. Mehra, for your insights, and thank you to our audience for the active participation. To summarize, the Indian gold jewelry market is a tale of two realities: that strong top line growth, but at the same time, the underlying pressure on volumes and the marketing spends for the players. However, the organized players are well positioned to navigate through these challenges. With this, I will hand it over to Rahul for the closing remarks.
Thank you, Tanvi, for moderating this session. And once again, thanking Mr. Banka and Mr. Mehra for their insightful thoughts and views. It was a privilege to host you. And lastly, thank you all the participants for taking the time out and being part of this Carriage webinar. For any other queries, feedback, or suggestions, please write us in the feedback mail. Goodbye for now. Request the tech team to kindly log off.
So thank you, everybody. Thank you.
Thank you all.
Thank you.
Thank you,
Thank
Sanjay ji.
you.
Thank you, Sam ji.